Hey everyone, and welcome back. In today's video, we're going to talk about Palantir's earnings report, comments that were made in the earnings call, and why the stock is down and whether or not I will start buying more shares right now. And yes, this is my signed Max Verstappen helmet from my recent trip to Miami. Alright, so Palantir right now is down 8.4% at the time of making this video. That's before the market opens. Now this is despite them beating across the board, and even guidance was raised. So what's going on there? Well, of course, you know this is not a cheap stock. It's actually a pretty expensive one. It's one that with a market cap of $290 billion. Year to date, the stock, of course, is outperforming the market by quite a lot, up 50% or so. Trailing 12 months PE 654 and a forward one of over 200 times. So yeah, definitely not a cheap stock, definitely a very, very expensive one. But it is one that is growing very fast and extremely profitable. Now, is that alone enough to justify the current valuation? No. But it is a company and a stock in a very, very particular situation right now, which is, well, on the one side, they basically have all of the momentum. They are performing extremely well. They are growing very, very fast, beats across the board. But on the other side, since this is a stock, since this is a publicly traded company, well, you of course always have to think about the price that you're paying. How much of it is actually baked in and how much is not. So let's discuss the earnings results. If you enjoy this type of videos, hit all the buttons. Would really appreciate that. We're very close to reaching 90,000 subscribers. Let's try and reach it before Sunday. Sunday, I turn 31, so would be pretty cool to reach that milestone. So hit that subscribe button, and if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so revenue for the quarter increased 39% year over year, so not getting into that 40% range just yet. Income from operation here has a margin of 20%, adjusted income from operations at 44%, cash from operations 35%, adjusted free cash flow of 42%. We're talking here about the margins, net income margin 24%, and adjusted EBITDA margin of 45%. And here GAAP EPS of 8 cents or adjusted EPS of 13 cents. So if you want to annualize that, you just do times 4. So the GAAP EPS 1 times 4 is just 32 cents. Well, the stock price right now is $113. Pretty easy to do the price to earnings. Now looking at total revenue excluding strategic commercial contracts, that increased 44% year over year and 7% quarter over quarter. We have a rule of 40 of 83%. Last quarter that was 81%. That was already pretty incredible. Even the quarter before that and the quarter before that and the one before that, etc., etc. You get the drill, right? We were already above that rule of 40 and now we're at 83%. It's very, very impressive. Looking at US revenue, that increased 55% year over year and 13% quarter over quarter, driven by an acceleration in US government and commercial, which we can actually start to look at right here. So US commercial revenue increased 70.3% year over year. And as you can see, we've seen an acceleration starting, of course, last quarter. And of course, this is very impressive, 70.3% year over year growth, but it is on top of a, let's call it, weak quote unquote quarter, right? This only grew 39.8% same quarter last year, whereas the upcoming quarters increased well above 50%. So the year-over-year comparisons are getting a bit more difficult. If we look at US government, well, since the worst quarter here back in December of 2023, that has continued to accelerate. I mean, look at this recovery right here. This is actually pretty impressive. Last quarter, we grew 44.7% year over year. Yes, this, of course, is lapping an extremely weak quarter. And then even March of 2024 could be considered very weak at only 11.7% year over year growth. So we grew 45.3%. Still pretty impressive. Let's see what happens in the upcoming quarters where the year over year comparisons are getting a bit more difficult. Now, Looking at total commercial customer count, we keep increasing above 40%, in this case 45.7%. Yes, of course, there were quarters where we did grow above 50%, but still growing now 45.7% year over year. Numbers are getting bigger and bigger. This is very, very impressive. Looking at total US commercial customer count, that's increasing 64.9%. Yes, the year-over-year growth have been coming down since the June quarter of 2024, where we did increase 83.2% year over year. But here again, the year-over-year comparisons back then were quite easy because of the lowish growth that we've experienced back in 2023. And so if we look at total customer count, that has increased 38.8%, a small deceleration from the 43.1% year-over-year growth that we've had last quarter. But then again, year-over-year comparisons were easier last quarter than this one, so I'll take this as a big positive. If you look at total remaining performance obligation, or RPO, we're now at $1.9 billion. That did also reaccelerate, so that's very, very nice to see. Net dollar retention rate also continues to go up. We're at 124%. So the existing customers that Palantir has are growing with them more and more, are spending more and more with Palantir, which means that this number right here, of course, is important, right? Because the more customers that they can attract, and if this continues, then not only are you getting new customers in the door, but the existing ones are spending more and more with you. That's a perfect combination. Looking at last quarter, they closed 139 deals of at least $1 million, 51 of at least $5 million, and 31 of at least $10 million. And of course, this was better than last quarter. Overall, looking at Q2 2025 guidance, they expect revenue of around $936 million. Now, if we take Q1, Q2, the expectations, and then we look at the full year 2025 revenue of, let's call it $3.9 billion, this means that they expect Q3 and Q4 to be billion-dollar quarters. For the first time, we're going to see $1 billion in revenue for Palantir in just one quarter. Now, of course, for a company that is worth right now $295 billion, I mean, $1 billion a quarter is probably a given, but then again, the company doesn't control the stock price, right? Usually we talk about a stock underperforming, but in this case, we're talking about a stock that is outperforming the market and probably overperforming as well, while the company still continues to do very, very well, right? It's beating across the board, growing very quickly, but of course, we are very much stretched. That said, there is a reason Palantir is a big winner, especially in this AI era. They said the following: legacy insurer AIG will plan to double its 5-year forward revenue CAGR. It's how the Army created a hurricane rescue system in 5 minutes rather than days. It's how Heineken completed a 3-year project in 3 months. The list goes on, and inherently inspired a global bank and 2 large healthcare organizations to go from boot camp to 7+ figure deals in weeks. Going forward, Palantir wants AIP to create fully autonomous companies. It doesn't care about building chatbots to boost productivity by 50%. They are focused on making companies 50x more productive. And this is, of course, the thing with Palantir, right? This is software that works. This is what you see during AIP cons. This is what AIP bootcamps are for. This is not another software that, okay, you had a problem, this is a solution, and then in a couple of years, come back, we'll have other solutions to problems that, well, we couldn't fix today, but we might fix in the future. No, Palantir here and its customers and partners are proving that you can actually do quite a lot with AI-enabled software already today. This isn't about another chatbot. This is about a software solution that, yes, happens to use AI, right? Because remember, 2-3 years ago, everybody was still talking about SaaS, right? Software as a service. Everybody was trying to upsell that each and every quarter. And then suddenly that disappeared and got replaced by AI solutions. Well, a lot of these AI solutions are just repackaged software as a service products. Now, looking at Palantir, the stock specifically, it's in an interesting spot because, well, we tried to go above that resistance point that was previously here in February of 2025. That didn't work out based on the pre-market action. So maybe we might be experiencing a cup and handle pattern, which should be bullish, but only bullish in the longer term. In the shorter term, you still need that handle, which means a red candle. Now, I don't know if that's going to happen or not. To be honest, I don't care. I mean, I hope I could be buying back a lot of Palantir shares at cheaper prices. Will it happen? Remains to be seen. But Palantir the stock is not Palantir the company. Palantir the company is doing exactly what it should be doing, which is outperforming. It's growing very, very quickly and then some. Palantir the stock probably ran ahead of itself. Could we see another pullback? We've just seen a pullback, right? At the start of April, I think the stock is up 70%, maybe now a little bit less. But it has seen a pullback during that Liberation Day week. Could we go back and test that and maybe have a double bottom? Remains to be seen. I don't know. I'm not here to time the market. I'm just looking for a good entry where I will be comfortable with the price that I'm paying. That's about it. The stock is down right now because, well, valuations are very, very stretched. The stock isn't down because of bad results. Far, far from it. So right now, that's about it. I'm waiting. I have patience. You might say, oh, you had the opportunity to buy a couple of weeks ago. Yeah, but like I said, I don't have a tree with cash that falls on a daily basis. So all in all, that's about it. If you enjoy this type of videos, hit all the buttons, share your thoughts down in the comment section below. There is going to be a video, of course, on HIMS, probably in the next couple of hours. And then after hours, we're going to talk about AMD, the advanced money destroyer. Hopefully it won't destroy your portfolio anymore. Anyways, happy to be back. See you all in the next one. Bye bye.